Market conditions majority bullish back to 14-0. Had a pretty decent reversal yesterday. Some volatility here, the bottom end of this demand block, finding that demand right at that location, didn't dip down into that white zone. The 236 still holding up pretty nicely. We potentially could be on our way there. We'll see if we get some fading today, if this upper range now, if we get some additional selling that pushes us down, some counter trend corrective type activity. We are still extended in the overall trend. That's something to be aware of, but this demand is certainly encouraging for continuation of this overall bullish uptrend. We're expanded here as well, 14-0 on the weekly time frame. S&P closed out yesterday at 14-0, shifting that back from that 12-2 to 14-0, solid uptrend here. We still have internal weakness on the number of stocks above the 50-day moving average on the S&P 500, sitting at 54%. So still nothing super exciting as far as breadth is concerned, but moving back up to that 54 range, holding that 50%. We talked yesterday about that 50% range sometimes becoming a demand location and some support happening here as well. But that has got to get significantly higher to be able to pull the market as a whole to the upside. And so if that remains kind of down like this, we'll probably continue to see some sideways activity, some volatility inside this range, potentially inside of the entire playground zone, which is from the swing high point, this top point, all the way down to the 236. This entire move from here to here is still inside of a bullish momentum zone, and but we can get a lot of volatility like we're experiencing now in the shorter term as well. VIX also slightly elevated, still in that slight green zone. That's pushing up to 17. That was down at 15 here, down in some of these lower ranges. So 17, got up to 20 the other day here as well, and majority bearish. A little bit of bullishness there as well with the last couple of days pushing that higher. Dow Jones Industrial Average still being rejected by this upper supply block, 442, the current level there. 12-2 on the Dow. I think that was at 13 and or at 11-3 yesterday, pushing back up a little bit here, back into resistance again. If we get some buying coming back in, we'll know relatively quickly if sellers are actually in control and going to push things back down to test that 236 location. Triple Q's also holding up here, 565, and above the momentum zone, some support right here as well. Just you can see where my cursor is, that line, that dotted line, is price activity where we had been at before, similar to the S&P 500, getting some demand there. Small caps, Russell 2000, weakness the last couple of days, finding support at the momentum zone here on the Russell 2000, still 12-2, so a little softening in the trend, upper end of the trend range, some compression starting to happen. The Russells have been weak relative to the other indices this entire rally, just not getting up to this upper level. We'll see if that continues, and if this now bounce becomes a bit of a counter trend, if we run into some resistance up in these ranges, or if it holds and we start to push towards this upper supply location. Oil getting beat up here still, this retracement, lots of volatility in oil as normal. It's a commodity, and commodities are supply demand driven, like equities are as well, but that's all they're driven by, and so you get a lot more volatility in a commodity. USO proving that fact here still, majority bullish at 12-2. Gold back to 310. Let me just squeeze this out just a little bit here. So we've got our swing low point sitting here, swing high point of the trend. We're measuring the trend structurally over on this side to say where potential areas of demand going to start to show up. 298 on oil, and it's obviously bouncing inside of that range and getting back into that bullish momentum, extended, but you can see that flattening of that trend. Still a really bullish chart. It just took off so far so fast that it takes a little bit of time for those patterns to compress and for new demand, new buyers to say, yeah, okay, I'm willing to take a stab at this one. Not quite there yet, but when it does happen, we could get a breakout and a continuation fall through on gold. Dollar also showing some strength here in the shorter term, weakening a little bit, and part of the strength in the dollar has been the sell-off in gold, and we're seeing that still work in lockstep. USO, or 2-year rather, still going to be part of the story as we're moving forward, and that is just, are we getting economic softness? Are we getting, the jobs data that came out kind of spooked the market? We saw a sharp sell-off, and it's kind of holding that level on the 2-year. 10-year, same story right here, that weekly time frame. Still bullish, still in that upper momentum zone on the weekly time frame, getting lots of compression just because of the quiet volatility, the quiet lack of volatility. We get those tight compression zones, but we are now majority bearish. That's ticking back and forth, still inside of that compression. And that's obviously the Fed has not adjusted rates. Bond market and the Fed are going to be relatively close, and the bond market's going to try and, it's kind of the real-time barometer of price activity. And the Fed doesn't necessarily do what the bond market says, but they're going to be similar. So the fact that the Fed has not made any adjustments for a while, we're just seeing that compression happening here in the bond market. We're seeing that bond yield curve holding at 0.53, which is the spread between the 2 and the 10. As we mentioned before, I don't cover this every day, but that is something to be aware of. We want to see a healthy bond yield curve. A healthy bond yield curve looks more like this. Okay, when we have really wide levels between the 2 and the 10-year, and when they get inverted, then that's this area below the yellow line. Inverted just means that the 2-year is paying more than the 10-year. So this would be, higher than 4.21, and we would have a inverted bond yield curve. Right now it's still strengthening, still showing some strength, but it's not overly healthy. That's part of the underlying economic concern that's happening, is we're just not seeing rates, we're not seeing dealing with inflation, dealing with all the different economic side of things. Bond yield curve is one for a quick glance to say, okay, where are we at in this bond yield curve? That can give us kind of a real quick indication of what's happened with interest rates, the short end and the long end, and we don't have to spend a whole lot of time really over analyzing economic conditions and bond conditions. Let's jump over to a couple of stock ideas. We're seeing some strength here in SNES, nice momentum, increased volume, confirmation bar. That's in the chemical agricultural space. Sometimes it's kind of fun to see in the industry, that's a newer one versus all of the traditional ones that we typically see. Also seeing some nice strength here in, it was ISS, I believe I wanted to cover, aerospace defense, confirmation bar holding the 236 of the current trend, swing low, swing high. This would have been connected to this bar back here at the 236, but that area, it's a very common support area for continuation patterns and continuation trends, and we're seeing that here in ISS. That'll do it for today's update. Everyone have a fantastic day today.